All right, so here's crude. And I'll just blow through a couple of examples here without all the explanation here. So here's the opening crude. We open at 9, right? So our IB high gets IB high and low gets set. What happens right here? First test IB high, right? If you don't know that trade, that's the easiest money of the day every day, right? First test IB high, IB low, right? There's an algorithm that fires there that will fade it. Watch that video if you're not familiar with it. Okay, not to digress, right? I do all the time. Okay, so I've got a swing, I get a retrace. What happens on this retrace, right? Now I get a higher low, but note, right, the momentum shifts. So I get under the average, the edge gets below the Bollinger Bands. I got red dots here. The pitch is red. So I've got, you can make a case here that there's a little 3 that's in there, right? You get a tiny little swing that's in there, right? Once your eye starts looking for them, oh shit. Once your eye starts looking for them, you'll see them all over the place, right? Is a little baby 3. Okay, so swing, retrace. Look, just a toe in the water, right? Barely gets wet, and then we go back down again. But that's not the trade. Where's the trade? Swing, retrace. Oh, I get to the edge. I get to the river bank. I can't take one step onto dry land. Down we go. It's a break, right? So even though you broke the golden zone there, it's broke slightly. This, I would take that trade here because of this. Right? So even I get this swing here, I can't get across the river. I can't get, look here, I can't get the RSI out of the chop zone. Right? I'm here, it's just in white here. So +5, -5. That's all I can do. I can't even get across the moving average. Can't cross the river here. The edge goes red right here. So here's the trade. Because it's showing me it's not strong enough. So down we go. All right. 15 ticks. Okay, we come down here. We did cross the river here, right? So you could use that as your confirm. Okay. So do I want to be a buyer here? Well, look at all that volume. Now we got this here. So you might say to yourself, hey, wait a minute. I thought, wouldn't you be a buyer right here? The pitch is green. The wicked wave, the RSI is green. We've got the fire here. Yes, that's a trade you might take if you've got more experience working with this template, but that's not the trade I want you to focus on. I want you to focus on the retracement because you don't have to wait long for it. So yes, you're going to miss this trade, right? Number one, right? We're back here. There's first test IB high. So I know I don't want to be a buyer there. I want to wait for the inevitable reaction that happens there. So look what happens. Oh, come here. Let's get that off. All right. So as we go up, we swing high. We get a retracement. Stop right there. We don't even cross the center line. Look at the wicked wave. RSI goes down, does not cross. We get 3 white bars, does not cross the average, and now we start heading higher again. Now, look, so you could be a buyer here because we've already had the algo reaction to the IB, so now it's different. So you might say, ooh, do I want that one? Well, wait a minute. It didn't even cross the river again. So is this the same thing happening? Well, lo and behold, right? Look what happens here. So the RSI stays strong, right? So even if you took 1 here, this would not be a panic point because, well, number one, we go into a squeeze here for a couple of bars. Again, thinking threes, right? What do we get? I get a swing, I get a retrace, and then I get another swing. Well, look what happens on the retrace. Oh, can't cross the river. Look at the RSI. Doesn't cross the average. Now it goes green again. I get the confirm here. So that's your trade. So you're going to miss this one because you waited for these two. What'd you get there? All right, 32 ticks. All right, so you might have been a little nervous on this, right? Because you're thinking, oh, that's going to go straight, right? Just like we did it here. Oh, it's going to keep going. Well, you had a little stutter here as the market was still fighting with the resistance at the IB high. So let's see. I don't know if that'll. I won't do it here because it's past it. So there would have been that little resistance right there. So it had to get through that. So there was a little rejection there. Brought it down. You're thinking, oh, are they going to reject it again? We're going to go back towards the VWAP or the IB low. Nope. Don't cross the river, and up we go. There it is. Now look what happens here. Right. Again, this is just end of the day today. It comes down. We cross the river. Right, so just so you understand, crossing the river means I'm more concerned about that happening because the bears, you can think of it that way, sellers have the momentum. If it crosses back, here's where I don't want to trade, when it's going from cross to cross to cross to cross, because I don't know which way it's going to go. When I see a failure in the middle of the river and I can tie that in with what the wicked wave and the pitch are doing, then I'm interested. Okay, that's Oh, let me finish up here with gold. And then, good God, this was going to be a short video. And so much for that. Okay, gold has been, I consider gold typically one of the most difficult markets to day trade. It's incredibly choppy. They run your stops all the time. It's very prone to double tops and double bottoms. But when it's moving, when the volatility is there, and we're not just chopping around like this is typical gold right here. When it's not just chopping around like this, running stops on either side, and we have trend, well, it can be quite good. So coming out of the Fed news, right, we've had good volatility, and I think yesterday was even better than today, but I'm going to show you a couple in here. So let's see if I can find a good one here. I might have to go to tomorrow. Well, here, this is not bad here. I can show you a couple here. So here as we, okay, so let me back up. Okay, so gold, where's our, here's our, so 9 to 10 is the IB range. We're not at 10 o'clock here. Let me just show you this because you'll see this on every market. So here's, oh yes, we do get it, right? So here's 10 o'clock right here, right on this bar. We are tagging the IB high right here. That sets the IB. That's the first test of the IB. All right, what does it give you? What's there on that retrace? 20 ticks, right? First test IB high, right? Almost always gets faded by an algorithm. Here's the second test, right? They can't get through it again. Now, you start to look, push beyond it. Here we cross again. Here, cross the river, rejected. Cross the river, rejected. Now we go here. It's a little tight. It's a little hard to see, but it's there. So I go up. Now I retrace. Now I go again. So I retrace. On the retrace, I do not cross the river. The edge goes slightly under, but as we come back out, as we start to head up, look, I cross the average and I get out of the chop zone. Look at the pitch. In this particular example, rather than the up-down volume, I've got a Weiss wave. So just to show you some variety here. So I can see buyers, 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 buyers all the way up. Now, so there's that's the first little three that's in there. You can see it. So swing, swing, high, but there's another three that follows it. Right, so 3, 3, 3, right there, right? There's the second one. Look on this retrace, right? I get one toe in the water. I start to come out. Here's the confirm. These are perfect, right? So you get one little pullback here. Look, we got just a bar, 2 bars. Actually, it's 1 bar where we get red in the RSI. So it curls down just a little bit because of this sell. Oh, you can't see it. If I had the up-down volume, you'd see sellers coming in there. So here's the well, that's more than you realize. That's a bigger pullback than at first glance. So what do we get there? That's 12 ticks. So I get a 12 tick, $120 pullback here, but we can't cross the river, and the edge stays green, pitch stays green. We're rising. So there's the second 3, and there's the confirm right after the retrace. I get back outside of the river. See, these are ideal because I'm in the river for such a short period of time. So I get the one pop here, and then I get the next pop right after 1 tick into the river. Boom, I go again. That's a beauty, right? End of the day, right? There's another 27 ticks there. Now look here. So we get here. I cross the river, so I don't take the second one. I don't take the second one because I cross the river on this one. Well, look what happens here. This is again, just today's price action. Okay, so what do I get here? I get a new high. What happens below? Right? You see the divergence here. Divergence. Oh, hard to draw that in here. Divergence here. Even the Weiss wave. Right? Look at the difference, the fall off in buyer strength. So I got a potential top here. Now that does not mean that's right at the value area high. That doesn't mean and look, we've got a squeeze that goes in there. That does not mean I'm saying sell that. Where's the trade? Boom, boom. Well, you got 2 threes there, but there it is right there. So swing, retrace. What happens here? You're gonna if you start to look for these, whether or not you're using our tool suite or not, if you're a Renko trader, this is, I've tried every possible way there is to trade with Renko bars. This is the most consistently profitable way to do it. Swing, retrace. We don't cross the river. Down we go. That's the end of the day. I don't know if you're taking that trade, but if you did, right, there's another $250 there per contract. All right, and you actually get it again here, but we're at a squeeze at the end of the day. That's likely not one you're going to take, but what is it? What's there? Just another 3. Oh God, that's so long here. Oh God, you guys are probably sick of this here, but yesterday was just incredibly good. Let me just show you in gold as it was going up, because it often won't do this here. Let me just get this up while it was rallying, and I'll wrap here. Now this is the open here. The Renko bars get a little wonky there. Oh, here, these are just beautiful. There were two big moves yesterday. I'm sure nobody's listening anymore because I've gone on this for way too long. Oh God, darn it. Well, here's a great. Oh, this is good, right? It's just the same thing. I've got all the measured moves on here. You can see every time we hit a golden zone that goes to target. So I'm going to take those off just because I don't want to distract you from that. Oh, right off the bat here, look, we're going red, green, red, green, red, green. So there's nothing here. Even though there are little swing trades here, it doesn't really start until we get to about here. Now, here, coming out of this, we come out of a squeeze. Remember, the concept is here from a lack of volatility comes an increase in volatility. So coming out of the squeeze, on the last bar of the squeeze, what do I get? Right, there's the edge firing that we're outside of the Bollinger Bands, and we get this nice move. So this would have been not so, this is a hindsight trade, right? I would not have taken that trade, right? And it's easy to look down below. Well, look how easy it was. But I wouldn't. You don't know at that moment in time. You're sitting right here. You don't know what's coming. You don't know what's coming. Even there, you're like, okay, well, maybe, but I just come out of this squeeze. I don't have any good swing structure here, right? But now it starts to go. Well, this actually ends up being a beautiful sell rather than a buy. So we get this big swing up here. Well, look. Okay, so nice swing, retrace, swing. So what is it, right? Of course, right? It's just another 3. But at the high, we'll do it this way. So we get a higher high here, but on the high, I can't cross the river. Now, look, I get just outside the average, but then I immediately fall over. Look at the pitch. So that would have been a very aggressive sell, which you might have taken. So that's the kind of trade I would take if I'm having a particularly good day. So I might be aggressive on that because I see that happen. I see the weakness up here in the divergence. But if it were just early in the day, I'm likely not going to take that, because what I'd be waiting for is this, right? And I don't get it. I don't, because I'm looking for the 3. So they're nice. You'll see this with Renko bars. You'll get these long extended swings that just roll right down here. On a 7-2, either you're not getting any retrace to right here. But note, on the retrace, across the river. All right, so it kills the idea that this was going to set up for me is killed as soon as it crosses the river, because now you don't know whether, is it going to do this, right? You don't know. So I got a little strength. Is it going to do this? Don't know. I end up going lower here, but note again, on this low, even though I get a lower low here, again, I can't cross the river. Or the wicked wave is above the 0 line in green and rising. Now, do I want to take this as a short? Right. Well, in hindsight, right, you say, oh, yeah, of course. No, but if you're right here, are you taking that as a short? Is there anything down here that says sell it? Right, if you're looking at your dumbass filters, hey, dumbass, why are you looking to sell that? No, I'm not going to sell that. Right? That's not a trade I'm going to take, because as it goes here, what am I waiting for? Same thing as above. I'm waiting for this. I'm waiting for this. Don't get it. Don't get it. So this is a long wait here, but once it starts to go, it really starts to pop. Oh, all right. So here's the first big climb, and you'll see the trades are in there. Here's this is what makes it all worth waiting for. So we're coming out of this. Here's the first trigger here. We reverse, so we cross the 0 line. Wicked wave goes green. The center line, that 20-period volume-weighted moving average, goes green. The pitch is green. Center line green. Vortex is green. We're above the center line, and the BB dots are green. All right, so is that the trade? Nope, that's not the trade. The trade is right here. So we swing, we retrace, and then we swing. So what have we got? Just another 3. Where's the trade? Swing, retrace. Now that's, again, it's bigger than you think, right? We end up going 15 ticks, right? It's deceptive to your eye, right? Renko can be deceptive to your eye. So I get a little wet here. Just a nice little dip, just right about to my knees in the water, and I pop right back out again. So if you're looking at that and you see that go out again, well, a couple of question marks in your mind. Oh, do I want to be buying this here at the IB high? Well, remember, it's not the first test, right? That trade is only there at the first test of the IB high. But you might see it stutter here or pause just a bit. at the IB high. There'll be natural resistance there. It gets through. Right, so you've got this. So this trade actually, right, and this is why you have to trust your tools. Gets you through and gets you 32 ticks. Right, retrace. Right, so here it is. It's just the same thing over and over, guys. If just trust me, let your eyes see nothing but that. Okay, there's the 3. All right, there's the 3. So swing, retrace. Look, we get this beautiful rotation. We get between the 21 and the 55. Oh, can't cross the river. Can't cross the river. So up we go again. Look what happens again. Now I get outside of the river here, retrace, don't cross below. Now at the high, right? So this, you look for this highs and lows, and these can be tells as to what's coming next. Now here I can't get across the river at the high, but look how the size of the swings are starting to shrink. So I get swing, retrace, swing, retrace, swing. Now all of a sudden I only get 1, 2, 3, 4, 5 bars here before it retraces. Now if you're for the aggressive trader, here's the trade. Right there for that short. Now that's counter trend, so you got to be very comfortable, and that may not be what you take for your first trade of the day, but look below. Right, I can't on the attempt here. I cannot cross the river. Right, I don't cross. I can't get across, and I roll over. So that's telling you this is well, you could think of this as an ABC, right, or you could think of there's a head and shoulders there if that's easier for you. Shoulder, head, shoulder. Right. So we fail to get the new high here, but additionally the momentum filters fail to break across. That's a sell all day. Now, how about right there? Here, how about for that one? Nope, because we crossed the river. The RSI goes out of this chop zone above the average and turns green. So at this moment in time, this is what I want you to understand. I don't know if I'm going to get that. I might get that. I don't know, because you're right here, right? You don't know what's coming. You've just seen that, hey, the last thing I see is momentum is pushed higher. I'm retracing. I've crossed the center line. What happens? Well, you don't know that that's coming, of course, right? I try and be mindful of hindsight trading. So this is not a trade that I would have taken because of that. But where's the next good-looking trade? If I bring this down a bit. Well, you got a series of 3s here. You do have a squeeze, which is, again, this takes a little judgment here, so you've got to rely on what's underneath. So this is telling you reduction in volatility, and it's not a great place to enter the market because you don't. The assumption is there will be an increase in volatility. You don't know if that's going to be up or down. Now, right here, coming out of it, so if you're a little more conservative, you might wait, as I've shown this now multiple times, you might wait for it to break that swing high, right? So it breaks it right here as the signal fires. So for the conservative trader, you've got that here. RSI is climbing above the average. Pitch is green and climbing. There's my trigger. Let's get the full thing in here. So let's assume a tick or two of slippage. There's 27 ticks, 270. Now what happens right away? Right off the bat, right after that, retrace. Right, this is what you're looking for, guys. Retrace. Right, now look here, right to the 21, holds it. Look at the edge. Right, can't cross the river. Doesn't even cross the center line before it goes again. Look at the wicked wave. Red. We don't cross the average. We stay green, and we stay above the average. Here's the trade. Now you want to be conservative. Same idea. You want to be conservative. You wait for that break. Wait for it to break that high. If you're a little more aggressive, once we start going blue again, you can take one there, and this is the confirm to add, or again, depending on your size, you take 5 there, and you add your second 5 there. What's right? Another 22 ticks. All right, and again, you may not get all of that. You might have got a little gun shy as you got up there. You get to 15 ticks. You're in a 2 lot. I'll take that 300. Boom, boom. Here's the end of the day. Oh, we're gonna keep going and set this up. Oh, look, can't get there. All right, guys, I went way longer than I thought I would. I apologize. I probably lost 95% of you. Anyone still watching? Well, I hope you got something out of that. I just wrap here by saying, God, I'm probably going to have to cut this into 2. But it, again, reminds you that all these tools are available as a demo. Try them out for 5 days. You'll have a demo to everything. So you can get the Devil's Edge, the Wicked Wave, the Devil's Pitch. There are videos on how to set these up. Of course, we've got all the measured move tools here, the volume profile, the moving. These are actually McGinley lines, our trailing stop. These are the bars, paint bars, and then what's very important here is the brick size calculator. Because if you have this wrong, you'll see the edge will be crossing over and back and forth, or it'll never cross. If you don't have these set right, which is why that Renko brick size calculator is so critical to this. If I have this incorrectly set, this won't trade as well because I'll be crossing too often or too little. You have to have it set on what these are. Right? It's the S&P is typically 85% of the time at a 7.2. The rest of them will go anywhere from a 7.2 to you know, if you're talking about the NQ, will go much higher than a 26. But you can't trade the NQ with well, in my view, you can't trade the Nasdaq with Renko bricks because it moves too fast and the brick size is too large. The risk is too high. But you can trade it with other tools that we make available. But just not. I would not encourage you to consider trading Renko in the Nasdaq unless you're doing maybe the micro. Right? Then you could probably get away with it. All right, guys, there you go. I hope that's helpful. If you have questions, let me know. I know that's way longer. I'll break this into two. Okay, guys, there you go. Hope that's helpful. Talk to you later.